Yesterday, you might remember, the Dow was on a historic tear at this time. It surged more than 1,000 points, that being the single biggest one-day point gain in history. It did not last. Here is a live look at the Dow right now, off 1 3/4%, down 378, which is, dare you say, Aaron Back of the Wall Street Journal, our corporate cousin, the new up. It's only down 400. Have we ever seen days after days of these wild 2, 3, 4 percentage point swings?
Oh, we've definitely seen days like this.
Or weeks like this?
Oh, definitely. I mean, you know, you go back in history to the financial crisis, there were big up and down days.
Oh, those are great memories.
Yes. I mean, it's not that bad yet, but this is not unprecedented, this kind of volatility. I think the market is kind of trying to find a bottom and, you know, doesn't quite, there's a lot of uncertainty as to what the Fed is going to do, when the government shutdown is going to end, so people aren't sure which way things are going.
You write for the column Heard on the Street. If you don't read it, you should. What are you hearing? Is there a single emotion that is coming out of those in the know, quote unquote, on this?
I mean, I think people are really uncertain about the Fed is the single biggest factor. The Fed basically says that it's shrinking its balance sheet on autopilot, selling $50 billion worth of bonds every month. It's effectively quantitative tightening, not quantitative easing. And at the same time, officially, they're still saying they may raise rates as much as 2 times next year. So that's a kind of double tightening. Now, is the Fed going to back off that now that they're seeing what's happening in the markets? Or are they going to keep going with that, you know, effectively double tightening? No one knows. And that's why I think we can't really make up our mind. Should the market be up? Should it be down? We're in kind of limbo here right now.
And it's interesting that these wild swings that we are seeing, at one point the Dow was down about 600 points today, are happening with no real news coming out, no significant news. The Wall Street Journal had a nugget coming out that Jay Powell, the Fed chairman, may sit down and meet with Donald Trump and try to put their feud on ice that seems to be going with Mr. Powell raising rates and Mr. Trump firing back on Twitter.
Yeah, I mean, it would certainly be positive if there could be at least a ceasefire in terms of this war of words between them. I think the Fed is not going to give up its independence. Don't think that Powell is going to make any promises to President Trump about policy. He shouldn't. I think he wouldn't. But if they could at least come to some understanding that it's not helpful to have Trump, you know, every other day tweeting about the Fed to the markets, then, you know, that would be helpful.
Do the experts have a consensus as they look at this? Is the traders on the floor having sort of a generic feeling about how this is going, or does it vary in terms of outlook house to house?
I don't know. I mean, everyone's also on vacation right now. I don't think that there's a real consensus. The consensus is that there's not likely to be a recession next year. But then again, forecasters are often don't have a great track record of calling recessions. So I don't know what that consensus is worth, actually. I mean, I think you see it in the market action. I think there really is a lack of certainty as to the direction of where things are going. And I think until, as I said, the shutdown ends and we start getting clearer messaging from the Fed, we can expect continued volatility.
So often you hear explanations at the end of the year. It's end of the year profit taking. It's end of the year loss taking for tax purposes. It is the mutual funds rebalancing. All of these explanations. Is there any way to know if it is those things which don't go to fundamental economic value, or actually a fundamental difference in economic value of how the markets are looking at these huge companies?
Well, I think it's clear, I think, that the market had gotten a bit ahead of itself, especially in certain very hot sectors like the FANG stocks, Facebook, Amazon, Netflix, Google.
There were bets going of who was going to be the next trillion-dollar company, not just the first.
And payments companies like Square,
right.
You know, was up more than 100% earlier this year. So I think there was some real froth in the markets. So to an extent, it's healthy that some of that froth is now coming out of that out of the markets.
Healthy and painful at times, like a good workout almost.
Yes.
All right, Aaron.
But necessary.
We appreciate it. A couple more trading days left, and then we go to the new year and earnings for 2018. Appreciate it, sir, as always.
My pleasure.
Good to see you.